Hi there guys, I hope you're all well and welcome back to episode 4 in the Forex trading challenge. So the aim of this challenge is to turn £100 into 50,000. How we have done that initially is taken £100 and turned it into 300, so a 200% account gain. And then with that money we have then bought a funding challenge. In the previous video, we attempted the 50,000 funded challenge. So the episode link to that will be the first line in the description. So if you are obviously going to want to catch up, by all means click that link and then you'll be able to get through. So in this episode here, we are going to be focusing on the verification stage of the challenge. We're going to obviously tell you how we're going to approach it. And then following that, hopefully we can get this passed. And then we've shown you the journey from £100 all the way up to 50,000 in funding. So what we'll do, we will get into the first trade here, and then hopefully following that, you can learn something along the way and see how we do. So guys, this is the first trade we have taken on the challenge or the verification. If you look here, this is the outline of the trade that we sent to the group. Sorry that it's quite blurry, we're zoomed in. So what we said was we was entering a live short on New Zealand dollar yen. We had the yen basket at an area of interest, so we was expecting yen strength, and also we found New Zealand dollar was at an area of weakness, so we said 85.98 entry with a 25 pip stop loss. So you can see what happened was price came up to the area. If we go into the 60-minute, you can see initially the trade would have worked, however yen was not at our area, so we actually entered here, and as you can see, price stopped us out. What happened with this trade, for some reason, if you look, which is on the screen now, my stop loss was set to 86.16, which was a 17 pip stop loss. When I sent the trade to the group, I actually said that there was a 25 pip stop loss. So as you can see, for people in our group, if we look, it actually hit take profit for them. So members in our group actually ended up making profit from this position, but I was stupid, and because I didn't set the right stop loss, this trade actually stopped us out for minus $1,000. This is minus 2%, so that's the approach we are taking on this verification. We are going to be risking 1 to 2% a trade, depending on how high risk the trade is, etc. But yeah, normal rule of thumb, we are going to be risking 2% a trade. Obviously, there's a 10% drawdown limit, so you've got 5 trades, so we're comfortable. We're not going to lose 5 trades in a row. So yeah, this is trade 1. It was simply, if we look at the technical side of things, it was simply, price was coming up to these highs, which was an area of weakness for New Zealand dollar. Yen was coming to an area of strength. We played them off against each other, and we was just unlucky with this position, with the fact that, you know, the stop loss was set wrong. And yeah, it would have won. So first trade, 2% down on the account. Unfortunate, but it doesn't really matter, because what we'll do, we'll take the next one and hopefully make that back. So we are now back with trade 2. It's on New Zealand dollar, US dollar. This was the screenshot we sent to our group. NZD US dollar, so we had the US index lining up with our area of interest. I said I was setting a pending at 0.6207 with a 20 pip stop loss. And as you can see, this was the position. So just for ease, if I draw a fib on here, just to kind of show you what we were looking at, you can see if we look here, we've got an area with multiple touches within the market. We had a 78 Fibonacci, and then if we look what happened in this position, if we go into the 60, you can see price triggered us in, and if not there, and as you can see, price then went and pushed TP for us. So we actually took, if you look on the screen now, we actually took 2% from this position. So pretty much what we lost on the first position on NJ, we've made it back on NU. So yeah, what we did in this one, closed the full position, got the account back to break even, and obviously following that, we are now at break even on the account. So we've lost one, we've won one, but because our risk to reward is consistent, we've now cancelled them. I know some people will obviously watch YouTube videos and follow people on Instagram doing, you know, 1 to 20 trades and stuff like that. Depending on your win rate, so myself and Jack, for example, our win rate is about 80%. So if we take 10 trades, at least A, will go break even or win. So that justifies us doing 1-to-1. If your win rate is lower, then obviously you want to take into consideration having higher targets, just so the win rate isn't impacted, just to make you overall profitable. So this was trade 2. The account's back at break even. So now let's wait and see what happens for trade 3. Here we are now analysing trade 3. So this trade 3 was a bit higher risk, so I only risked 1% on this position. It was in and around news, and for that reason obviously it wasn't strong enough to send to the group. We did tell them that the dollar was obviously at an area of weakness, and then what I did, I just personally took a high risk position from the 0.61 area. So if we look here, in and around here, and you can see regarding this one, we lost 1%, $530. So I'll just show you overall what happened. So let me just do this. So looking at a 25 pip stop loss, 25 pip TP. And as you can see, if we go into the 60 minute, I'll play it out. Price came down, triggered us in, nice rejection. We had a bit more rejection. And then as you can see, price went up into profit. We thought everything was good, and it didn't quite manage to hit TP. So for that reason, this trade actually lost. Good job. Obviously, I didn't send it to the groups. Myself and Jack and Brandon, when we are sending trades, if they are higher risk, it's not obviously in the best interest to send them to the group. Main reason being is that there's less chance of them working. That's why, for example, in this situation here, instead of risking 2% on the full position, as you can see on the screen, and we only risked 0.5%, meaning that if the trade lost, it wasn't taking away all of our gains from previous trades. So that was trade 3. Obviously, so far we've taken a loss, a win, and another loss at half risk. So we are now down 1% on the account, but obviously we will analyse, and then as you can see from looking at the screen, it was a while where we was taking a lot of break-evens within the market. So this is the next trade. So if you look, we actually missed 1, 2, 3, 4 break-evens we had within the past few days. So for that reason, due to the fact they are break-even, we're not going to go over them. So this trade here, which was the 1865 buy on gold, this is a trade Jack sent to the group. Once again, it was a high risk position, so for that reason, as you can see, we only risked $500 or 1% on this position instead of the 2. So the reason obviously for the trade was we had a nice key level, multiple touches within the market. If you look from the bottom, we also had a Fibonacci, and then there was also a couple of EMAs. So this here is what the trade looked like. You had some EMAs, the key level, the fib, and obviously these were the confluence as to why we used them, and they're just saying it was high risk. Okay, so that covers that. If we look what happens, this is the 1 hour time frame. Price came in, did reject a slight bit, but not much. And then what we did, we then got a reaction and thought, you know what, this is it. And then the next couple of candles, gold then fell off and then kept going down. So in this position here, as it was high risk, we only risked 1%, which was good. Because there's no point risking 2% on a high impact and news and high risk position, because at the end of the day it benefits absolutely no one, and if you lose, it's just making a bigger indentation into the account balance. So as it stands now, pretty much 2% down on the account. So we initially had the loss, then we had a win, and we've had 2 high risk losses, which has now put us obviously slightly down. So that was trade 4, if I'm not mistaken, and let's just see how it continued. So as of right now on the screen, you are looking at a Euro US dollar chart. Before we break down the reasoning for the trade, let's just have a look at the message we sent to our group. So we said Euro US dollar, we were entering a live position from in and around this area here, 22 pips safety zone from wherever you got in, and then the reason for these trades. So the dollar was at an area of weakness, euro was at an area of strength. So for that reason, we paired them together and took this position here. So if we look what happened, we were triggered into the trade. And then what happened straight away, price pretty much in the next candle, if we look 1-to-1, hit our TP. So if we look at this position here, what did we take from it? So if you look, we actually took 2% from this position, which was a $1,042 win. So obviously that also now takes us into pretty much break-even territory, obviously following the previous losses and break-evens, etc. So this was the trade here. We had a nice, obviously almost like a head and shoulders pattern. If you're unsure what a head and shoulders pattern is, it's when the market comes down, creates a low, creates a lower low, comes back up, and then you're expecting price to come here and then come up, and this can be almost like a reversal pattern. This is an inverse one. What you'd look like from a bullish perspective is something like that, and then you're trading that. So that is pretty much how it works. So that was Euro US dollar pretty much broken down. That is the trade we took, $1,042 from this position. We are pretty much, if we look, about a couple of weeks into the verification, so not too far into it, but what we'll do, we'll just break down a couple more trades and see where we go. On the screen right now, you can see a pound US dollar position that we were interested in. We said we were looking at 125 area round number for shorts, and we were looking to use a 30 pip safety zone from the entry. Reason being, if we look on the chart, is that if I draw a Fibonacci from here, and if it draws Fibonacci from here, push down, and if we go further left, if we just extend that, multiple areas of touching, so you know, good key level across the board. Okay, so this was the position that we were interested in. What happened with it? Let's see. So as you can look here, we go into the 60-minute, price came up, triggered us, and pretty much slammed. And if we look into the 15, price actually hit TP 1, 2, 3 within about 45 minutes to an hour. So if we can look on the screen now, this was a lower percentage that we risked on this trade. And in fact, no, it wasn't actually, it was just split into two. So what happened was, for some reason, I think we got the lot size wrong. So then following that, what we did, we pretty much just entered two positions. So we closed one position out for 498 and one position out for 518. So obviously overall we took about 2% from the position. This now means we are just under 2 or just over 2% we need to pass. And once we do that, so hopefully we need about $1,400 now on the challenge. If we do achieve that 1,400, then we will receive, you know, the funding. So this was trade, I think, 6. So as you can see, we sent it to the group, we showed it play out, pretty much as transparent as you can get. And now we are simply just waiting for another position, and then hopefully that's the one which can get us across. So as you can see on the screen now, this is a trade that we took on Euro US dollar. We said we were looking at shorts from this area here. Reason being was key level, 2 Fibonacci's, and also a round number. So for that reason, this was our area of interest alongside this kind of level here. If you can see what happened, price came up, it actually went into some heavy drawdown, and then luckily for us, the interest rate decision came out for the dollar. We was personally happy staying in the trade because we was already in drawdown, so there was no real benefit to us, you know, getting out of the trade. It was either going to lose or win. We took the gamble, and as you can see, the trade went and won. So from what you can see on the screen now, we took $1,300 or just under $1,400 from this position. This took the account balance up to 52,500, and therefore we have successfully passed stage 2 of the verification. So started with £100, turned it into 300, passed the challenge which cost us 300, and then now we've passed the verification. So for that reason, we have successfully done the challenge of £100 to 50,000. What we'll do, I'll just do a brief summary after, and obviously just show you kind of like the certificates, etc., that we received from doing. As you can see on the screen now, this is the Fiddlecrest certificate, which shows we got the account size of 50,000. Basically says completing all requirements during the challenge. You've demonstrated excellent risk management and trading skills. In terms of prop funds, I actually think this is probably the nicest looking certificate compared to FTMO and things like that. But yeah, this just shows the date that it was passed, the account size, and then obviously my name there. I've blurred my last name for obvious reasons. But yeah, this is pretty much almost like the proof of it happening. We are going to continue this series, so we're actually going to show you now profit splits and things like that from the challenge. So hopefully now this will be, it might not necessarily be a weekly episode, it might be monthly or bi-weekly, whatever we do regarding payouts, this should continue. So you'll obviously see the tally increase over time and just show what we turn this £100 into. So if you haven't already, guys, please subscribe. If there's anything that you want to ask, then just leave a comment with any questions and we'll be happy to get back to you. Obviously, this challenge was passed using all the trades sent to our group. So for that reason, obviously, if you are interested in joining the group, by all means, click the link in the description. And also, if you are looking for some content to actually learn how to trade, then there is the DVS blueprint in the bio as well. So yes, guys, thank you very much for watching, and we will see you in the next one.